Hello, good morning to everyone in North America, and good afternoon or evening if you are further ahead of us in the world. Thank you so much for joining us today for the first episode of October of Logtech Live. I'm Eric Johnson. I'm your host most of the time. I mean, like at least 90% of the time. When I'm not hosting the show, I'm the senior technology editor at the Journal of Commerce, which is part of S&P Global. But my favorite part of each month is being with all of you on this show to talk to some of the most interesting people in the world of logistics technology. So a few things before I get to news of the week and our guest today, who I'm super excited to talk to. Just a few events that I was either at or that I'm going to. Last week, we at the Journal of Commerce wrapped up our inland distribution event, which if you've watched the show, you've heard me talk about a lot. It was awesome. It was every bit as good as I expected it to be, due mostly to my two colleagues, Ari Ash and Bill Cassidy, who were chairs of the event. They really put on an unparalleled program. I forgot, we were close to 100 speakers over 3 days, a huge amount of learning, a few takeaways. Everyone is sort of on the knife's edge about like when the market actually turns. There was a lot of different viewpoints about whether it's going to be a first half, second half, or maybe even pushing into 2025 kind of rebound. But most of the thrust of the conference was get yourself in order, get the house in order right now while there's a little bit of a time to pause and take a breath and be ready for when that rebound happens. I mean, that was the theme of the event. Another thing that came up time and time again was cargo theft. Just a huge amount of talk about cargo theft across the 3 days. So really, that's going to be an area we will definitely be focusing on at the Journal of Commerce. And maybe it's time to have someone on this show to address the way technology is assisting with managing cargo theft and fraud and double brokering and all the other kind of stuff that's been in the news a lot of late. So next event for me will be, well, actually, I'm headed later today to Barcelona. I will be at Freightos's Freight Tech 23 event. Really cool event I've been to a couple times before. Just a really cool gathering of people who are very international and very logistics technology focused around the air cargo and ocean space. So I'm super excited. I'm going to be talking to them about what's going on in the market and just meeting a lot of cool people. And I mean, is there any better place in the world to be than Barcelona? Come on. But after that, the next event that I will be part of is the IAPH World Ports Conference, which is end of this month. It's actually over Halloween, so I don't know if we're going to be wearing costumes for that or what, but I don't know. It's in Abu Dhabi, so I'm not sure Halloween is a huge holiday in Abu Dhabi, at least not as big as it is in the US. But really excited for that. I'm going to be leading a whole bunch of different sessions and roundtables around technology, including about cybersecurity, which is obviously a big topic right now. We'll get to that in a second. I also wanted to mention that TPM registration is now open, and it's been open for a while. And if you want to get early bird pricing, I have bad news for you. Early bird pricing is over. It ended October 1st. We're now in this sort of middle stage where you can still get a discount off of a TPM pass, but it's not as good as the discount that you would have gotten before October 1st. That said, and I forgot to let Nicole know about this, if you use the code EJTPM25, I'm sorry, EJTPM20, you know what? Hold off on the discount code. I'll follow up. I forgot what the exact code is, and next show we will have it. If you want, reach out to me. I'm at eric.johnson at spglobal.com if you want to reach out and get a code if you're a loyal listener and watcher of this show. And we'll have the code actually in black and white in our next episode. So one last thing I wanted to mention, our good friend Sarah Barnes-Humphrey at Let's Talk Supply Chain, the guru of Let's Talk Supply Chain, the head at Let's Talk Supply Chain, she's going to be at the Bloom and Vision Conference November 5th through 7th in San Francisco. There's if you want to learn more about it, look in the comments, and we have some more details about how you can attend that event. Should be a really cool event. I unfortunately cannot go because I'm just coming back from Abu Dhabi myself, but I would have loved to attend otherwise. But definitely click on the link to learn more about that. Okay, quickly, lots of news. As always, we're in the full fall season. Everything is crazy everywhere. But let me first focus on a line of stories that my colleague Greg Noller has been reporting on a lot the last couple of weeks, which is January 1st, Europe has a emissions trading scheme program that really is involving all of the major shipping lines. And I am not going to go into the depth because that would be a whole half-hour episode of this show unto itself to go into that. Speaking of which, maybe I should have Greg on to explain what's going on. It's super important. It's very interesting, and his reporting, as well as we had a commentary from Lars Jensen, our JOC analyst, talking about how the market isn't really ready for this. We're less than a quarter away from this going into place. We don't really know how it's going to pan out. We've had different carriers talk about different costs that they plan to push onto shippers to defray the cost of these trading schemes. This is all about reducing carbon emissions associated with liner shipping, and it's only related to trades in and out of Europe, right? So it's not something that that shippers and carriers can kind of plan for on a global basis yet. It's really only, so it's creating like a different process for them to be managing alongside whatever else they're doing in terms of reducing emissions. So it's one of those things. It's a good thing. It's just the process and the policy making and the regulatory enforcement of it, very unclear, as well as what costs are going to be passed on to the industry. So the next story I wanted to highlight was one coming out of inland. I led a panel about truckload pricing technology, and really it was about how shippers and brokers are sort of using technology to get a little bit better and sharper on knowing what the right rate is at a given moment for a specific load, so they can price more quickly and more accurately to market. Also, we talked about what sort of base volume can be for a shipper or a broker could be pushed into the contract market, so you avoid sort of relying on the vagaries of the spot market as much as possible, and then using that sort of unknown volume or volume that's hard to forecast, and then dynamically quote or dynamically price those loads more effectively, so you're not so beholden to the market and you know what the market rate is in any given moment. Super interesting panel it was. I tried to get some of the high points into this story, so definitely encourage you to read it and reach out to the companies that we talked to, Good Ship, Neutral, and Green Screens. All very interesting companies looking at various aspects of this. And then one last thing, I alluded to this in the opening comments. Cybersecurity is just this constant thing. Like it is every second of every day, there's hacks going on, and it's really about which ones actually penetrate the armor of the collective industry and individual companies. This week we saw Estes get hit and have their systems affected. We talked in this story, Bill Cassidy talked in this story about, on top of Yellow going bankrupt and all the volume from Yellow kind of flooding into other LTL carriers, now we have this. Is this going to force some of Estes's volume short term into other networks, the carriers, networks of other carriers, and sort of further crimp capacity in a market that's already feeling a little bit tight right now on the LTL side. So, I think this is a super interesting topic that, again, probably need to have someone on the show to sort of dissect what this all means from a cybersecurity protection perspective. There's the before, the during, and the aftermath kind of aspects of this to always think about. And right now, Estes is definitely in the recovery stage of this. So, all right. Well, enough lead in, enough news of the week. It's time to bring my guest on this week. So joining me today is Gregoire Lehmann, who is a principal at NewRoad Capital Partners. Gregoire, awesome to have you on today. Really excited to talk.
Thanks for having me, Eric.
Excellent. Yeah. So we, I think, first met, I forget when we first, was it at Manifest? Might have been at Manifest.
Yeah,
last year, right?
Manifest. Yeah, that's right. Yeah.
Yeah. So it was great to talk because you are in a part of the industry that I look at and focus on a lot, the sort of venture world, especially the venture world that is very aligned to supply chain and logistics and just sort of understands our market a little bit better than maybe the venture world as a whole. So was really excited to talk to you and bring you on the show today. Maybe give people a little bit of background on your story. Like, how did you get to this point of joining NewRoad? What brought you to this point?
Yeah, I'll give you my background and the firm background as well. That explain how I got into supply chain. But I'm originally from France. I got recruited out of high school to come play tennis for the University of Arkansas. I played tennis for 4 years there and graduated with a degree in finance and econ. After graduation, I got a taste for entrepreneurship on a small scale and worked on a business that we scaled with two of my former teammates. I did that for a couple of years and then went back to business school to get my MBA. At that time, I had spent several years trying to build something, managing day to day, which included making tough decisions, handling finances, and building a customer base. So this hands-on experience drew me to the world of venture capital. It really made me appreciate how hard it was to scale a business. So it was attractive for me to be in a position to help founders. And so I got connected with the NewRoad team about 7 years ago, which was really the only venture firm in the Northwest Arkansas region at the time. And I was really impressed with the entrepreneurial background of the firm and the two managing partners, Clete and Jeremy, who both had started and scaled businesses. So I decided to join them in 2017. I joined at the same time the firm was starting to build its operating partner model and focus on what we call the retail value chain. That's the area we invest in. That's what we describe it, the retail value chain, which really means, enabling the flow of consumer goods from point of origin to the shelf or the home. And within that broader investment thesis, 2/3 of what we do is pure supply chain logistics. And the other third is more around retail technology and marketing technology. So me getting into supply chain was a happy accident. I joined the firm at almost the same time as the first two supply chain operating partners we brought on, Chris Saltermeyer, who was the EVP of supply chain logistics at Walmart, and Tracy Black, who was the SVP of IT at JB Hunt. So I like to say that I got my supply chain education from both of them. Chris ran one of the, if not the largest supply chain operations in the world at Walmart. And Tracy was leading IT at one of the largest carriers in North America. So I got incredibly lucky to be able to learn from them, and still am today. So since Tracy and Chris joined, we've added a few more operating partners, like the former CIO of Dollar Tree, Family Dollar. We added a division president at General Mills, and another supply chain execs who's right in your wheelhouse, who was in charge of international supply chain at Walmart, and used to manage ocean and air freight for them. So these operating partners, with their deep experience leading large division of enterprise companies, is very complementary to the entrepreneurial and operator background of the managing partners at NewRoad. And that mix is what we describe NewRoad as being operator-led, meaning the firm is led by operators. And I think that's what really differentiates us in the marketplace. So at NewRoad, we invest at the early growth / late stage venture, typically in companies, I would say larger Series A rounds, more commonly Series B rounds, and a little bit of Series C. And now that valuation have come down, it's a little easier for us to get into those rounds. Mm-hmm. So what that means, typically companies that are post product market fit that already have some scale. We used to invest a little bit earlier than that, but we realized that for us to best leverage our team's network, which is comprised of most of the Fortune 500 companies and beyond, it's easier to help strategically think about how to target these companies, but for us to make introduction to these companies when the companies we look at or invest in are a little bit more mature and have more scale than a very early stage company. And like I said, I think that's what really differentiates us, being operator led, being able to open our network to our portfolio companies, helping them target enterprise customers, knowing who to talk to at these organizations, how to approach them, is I think is what really sets us apart at NewRoad. So that's the firm in a nutshell.
I want to dig more into the operator led. There's a lot of different venture funds, and we've had a few of them on the show, who are and some corporate venture funds within large established either shipper or service provider, even asset. We've had Maersk on, we've had Schenker, and their head of ventures. What do you mean when you maybe just dig in a little bit more into the operator kind of led model and what that provides to the companies that you are investing in versus, just sort of a general fund or even one that's supply chain focused, but they're, that none of them have like an operator background?
No, happy to do that. So, what it means and I think why it's important, our operating partners, used to run division of these large Fortune 500 companies. So they have seen a lot of companies, early stage companies. They have experienced firsthand, problems with their own supply chain. So being able to put the hat back on when they talk to founders and see, I understand the problem you're solving. When I was at Walmart or at JB Hunt's, I was dealing with these issues. So this may make sense or this may not make sense.
Mm-hmm.
And then, so I think that's kind of the first part, right? The second part is assuming that what you're doing is a fit for these large enterprises, how do you target them? How do you go after them? Let us help you think through, if you were in the room with me when I was at Walmart or at any other of these companies, how would I have wanted you to approach the conversation?
Yep.
Talking about ROI and why this solution makes sense and etc. So I think being able to do that with that background is unique. At least at the stage we invest at, I think you see that more commonly with private equity.
Mm-hmm.
They have a pretty wide roster of operating partner talent, but at the venture stage, it's a little bit more unique.
So I'm glad you brought up the private equity thing, because I think some people, and including me, struggle to understand that the stage that you come in at, where it's not a small amount that you're investing. There's a big sort of not just monetary amount, but you as the firm are putting a lot of people and time and expertise, resource. You might have a seat on the board, all that stuff, right? How does where you're at in terms of the stage you come in and the amount you're investing, how does that compare to like a private equity investment? What is the comparative advantage of your approach versus that same company saying, we have a good sized business, we're ready for the next step, let's work with a private equity partner?
Yeah, private equity, you would usually come in and invest in companies that are profitable.
Yep.
Then are generating cash flow. So the stage we invest at, most of the companies are still unprofitable, so they need growth capital. So a firm like us makes more sense. Private equity usually won't get involved that early. So that's the reason why. I think it's just different strategy.
Yep, fair. I only asked because I did see, I started to see later stage VC, especially during the pandemic, start to blur. The lines seem to start to blur a little bit with, kind of some of the institutional capital on the private equity side. So
yeah, we're seeing that, by the way. That is a good question. We're seeing that less and less now.
yeah,
I think people now go back to
the tide has gone out.
Yeah, yeah. But no, we saw a lot of multi-strat, even hedge funds, right?
Yeah, a lot of hedge funds.
Yeah, they were coming down market and investing at Series A, Series B stage, which was really crazy to experience and compete with.
Yeah, for sure. Okay, so if I look at the list of companies, you mentioned about 2/3 of your investments are in supply chain logistics. If I look at the list of companies that you've invested in, there's a lot that I cover, at joc.com, right? So I'm just naming a few, and I'm probably missing some. Not My Carrier, Emerge, NYSHEX, Wave, BL, Platform Science. When I think about all of those, all interesting companies in their own right, but obviously none of those compete with one another. And not that you would necessarily want to invest in companies that are directly competitive with one another, but how do I think some of those are in trucking, some of them are in hardware, some of them are in, kind of like NYSHEX is an unusual, a bit hard to describe their model, right? In that they're, sort of trying to change a behavior in the industry rather than necessarily like a software product, right? So how do I think about what unites all of those companies from a NewRoad perspective? Like what was attractive to them collectively?
Yeah, so the way we think about investing in supply chain in general is by identifying certain areas of the supply chain where we see actionable opportunities for digitization or replacing legacy technology in subsectors within the supply chain that still rely on either manual processes or still rely on these legacy technologies, and where we see opportunities for new entrants, right? Because not every pockets of the supply chain has necessarily room for new entrants and disruption of these legacy systems. But with that lens, we look at everything across the supply chain. So it could be for, as you described, over-the-road trucking, inside the warehouse, or even ocean shipping, and kind of everything in between. And that's another area where the value of our operating partners come in play, helping us develop our investment strategy and identify the areas we should focus on. So, given the time they spend leading these division of large enterprise companies, they understand the key industry pain points and areas of opportunities that help us identify some of the companies you mentioned. So, to give you concrete examples of the thought process for investing in some of these companies, within telematics and fleet management software with Platform Science, before the ELD mandate that came about, I think it was 5 or 7 years ago. If you wanted a telematics solution, you had to buy expensive hardware from one of the legacy providers and use their closed system that were really hard to integrate with and lack flexibility. Yeah. So some of our operating partners at their previous companies actually had implemented these legacy systems and knew there was an opportunity for new entrants. And when they saw what Platform Science could do with their open source platform, their ability to integrate with many third-party applications, as well as their own, and now even with their integration with the trucking OEMs, to enable the purchase and use of third-party telematics solution directly from their trucks without the need for aftermarket hardware installation, they knew that was something we should pursue. So identifying these opportunities, similarly with the WMS market, if you look at the market, the legacy players and industry leaders were built in the 90s, are mostly operating on-prem.
That's the definition of closed, right? Sometimes the same product has two different instances at different warehouses, and they don't even talk to each other. So.
Exactly. Yeah. And they take 6 to 12 months, if not more, right, to implement. And they were built for B2B, shipping pallets. So in a new environment with e-commerce and omni-channel fulfillment, where you have to ship thousands of orders per day direct to consumer, those legacy systems are not adequate for that. And that's something we recognize in what we invested in this company called Logtech. That company was purpose built for high volume fulfillment, so mostly direct to consumer. It's cloud based. They have all the pre-built integration with e-commerce marketplaces, order management system, and even certain robotic systems. And because of that, they can be implemented much faster than legacy systems. They can be live in 4 to 6 weeks, which is very attractive to a lot of 3PLs and high growth e-commerce brand and fulfillment networks. So they're actually the WMS that empowers some of the largest fulfillment networks in the world, like a Deliver or companies like that.
Yeah.
So these two were more examples of what we see like gaps left in the market by legacy tech providers. But we also look for opportunities to digitize certain manual or paper-based process in the supply chain. So an example of digitization would be with an investment we made in the LTL space, a company called MyCarrier. They've really been on a mission to digitize the LTL industry since launch. To do that, they initially built a TMS for SMB and mid-market shippers and partner with the LTL carriers to streamline the carrier and shipper experience, which is easier to do. Yeah.
That's it. We had Mike Bookout on our program at Inland last year. Very interesting product because it essentially allows you as a shipper to access a TMS across whichever LTL providers you use, right?
Exactly. It's easier to do in LTL than in truckload, right? Because it's not fragmented and
smaller group of major players, right? Yeah.
Exactly. And if you had it last year, I mean, you may just a high level kind of recent updates on kind of what they're doing now, which is really cool because it has evolved far beyond just being a TMS. It's more of a platform and digital infrastructure for LTL.
Yep.
They can automate quotes based on shipment characteristics, the booking process itself, and then the purchase of cargo insurance and the freight audit process now all into one platform. And they actually reached a pretty cool milestone recently. They executed their first digital end-to-end LTL shipment from data originating inside the shipper's ERP all the way to the audit invoice back into their accounting system and every step in between. So cool. when you think without any manual data entry. Yep. So when you think about what the SMB mid-market LTL shippers were doing previously, I mean, the whole quote, book, and audit invoices were all done manually in spreadsheet that they raised with the LTL. I mean, it was a really brutal process.
It's a really messy. It's a messy mode for the user, really, compared to other modes. So
it really is. So I think that that's a good example of kind of what we look for. I mean, you're familiar with WaveBL and NiceX, but they are a great example of digitization as well. I mean, WaveBL is digitizing global trade. Starting with the bill of lading. It's hard to believe when you're not from the industry that bill of lading are mostly issued via paper. And you think about all the touch points you have in the journey, which is even worse when the banks are involved. You've got several banks you got to deal with. So it's a brutal process. And that's another great representation of the opportunities that are still in front of us. And I think why VCs and NewRoad specifically are investing in supply chain.
So I kind of want you to speak more broadly than maybe NewRoad, if you can, for a second, because I think you and a few others that have sort of that DNA of understanding how sales cycles and logistics work probably understand this innately. Do you feel across the VC industry there is enough appreciation for how long sales cycles are in logistics? Because I think, obviously the pandemic was a weird period, and it's really hard to draw long-term conclusions from behavior on the buying side from that time when everybody was just in desperation mode all the time.
Yeah.
Normally it's long sales cycles, very deliberate, very price sensitive markets. Like, is there an appreciation the world at large? Because you guys come in and you don't fund an entire round, right? You go in with partners and other investors that you have to say, no, this is a great investment. You should tag along on this, right?
Yeah. And your question is around specifically to the venture community.
Yeah,
right?
exactly.
Yeah.
Yep.
Okay.
Yep.
Yeah. So I think, you alluded to it, but during the pandemic, you had a lot of generalist venture firms that had never done anything in the space suddenly take an interest in the supply chain industry. We had all these disruptions in the supply chain that were front page news, instead of kind of back of it. And I think that exposed a lot of things in the supply chain that people didn't know, and the ability of the supply chain stakeholders to adapt to demand and supply shocks, right? Which was not really, people didn't think about that before. At least people that were not from the industry were not thinking about that. So that led to a lot of VC dollars being poured into supply chain technology. And I think a lot of people did it without necessarily understanding the nuances of the industry. It's a great industry to invest, for all the reasons we previously discussed, but there are very distinct nuances. As you alluded to earlier, the sell cycle tend to be longer, especially in this environment, right? It's really hard to sell a technology solution to a freight forwarders or a shipper. You got to show a clear ROI, and the industry is also very much, as relationship based, built on trust. You have a lot of stakeholders to deal with at the same time. The information flow between these various stakeholders and the systems is a challenge. So I think some of these nuances are maybe lost on some people in the venture world that are not as familiar with the space as we are. But I would say that there are a lot of great investors in the space, both generalists and supply chain focused, who understand it pretty well. And I don't want to complain about having too much capital being invested in supply chain technology. It's
a good problem.
It's been so underserved by technology historically that I think it's a good problem to have. I think
I'll add one other thing too, in terms of, to me, I mean, we at Journal of Commerce, we take a shipper-centric view of the world, and ultimately anything that anybody is investing in is to serve the shipper at the end of the day. So even if it's a service provider, an asset provider, and they're investing in something, ultimately it's to improve their ability to serve a shipper, right? And the problem, if you target shippers directly with technology, is, and I'm sure Chris, if he was here, could very much attest to this, is if you're Walmart and a very supply chain focused company, you still have 38 other departments in the company that also have their own budget and investment priorities around tech. And a lot of times you have to wait in line. And especially if logistics is not seen as a core differentiator for the business, it's probably going to be one of the last things that gets funded, right? So if you're selling into that persona, it could be a long wait. You're going to spend a lot of time. It's not a product-led growth kind of industry, So I think you're right. I think even some of the generalists that have come in have probably learned a hard lesson. Some of them have not learned had to learn a hard lesson, but they understand it better now. That this market doesn't always behave like it did during the 3 years that we just got over. So,
and one thing you're spot on. One thing I will add to is, and that's what we like the space so much. And if you find the right companies, it can be extremely rewarding. Supply chain is really front and center in those budget conversations that you were alluding to now. People are like, we can't have a supply chain breaking.
Yeah.
So they are actually, although it's a tough market, if you can show, clear value proposition, a good ROI, a short payback period, and can help with building resiliency and all these things that we talk about.
Yep.
You're going to be in the conversation.
Totally agree. That's very fair. I think even if the desperation and the urgency has receded a little bit, the conversation, supply chain is in the conversation way more than it was before. And I'm even seeing conversations linked around how does finance sort of take the lead on a investment that benefits logistics or benefits supply chain, because finance is going to have a lot more clout. They're going to understand the ROI of a investment a lot better than maybe a logistics person who doesn't even understand the underlying tech as well. So we could talk about this particular topic for the whole episode, but I wanted maybe one other sort of industry technology related thing. So standardization is an issue that I think is super interesting. And I think it relates to a couple things, you know, especially on the ocean side, the investments you've made in NYSHEX and WaveBL, addressing different aspects of standardization in the industry. I have like sort of a philosophical question for you. Is standardization from your position, is standardization good for the companies you invest in, or is it potentially not good in that if things actually get standardized, there's less of a need for tech?
Yeah, that's an interesting question. I think, and it's very complex and evolving constantly. So I think whether it represents an opportunity or constraint depends on a lot of things. But generally speaking, I would say that the lack of standardization usually creates opportunities for innovation. That's something we saw with NYSHEX for contracts, and with WaveBL and what the DCSA is trying to do for electronic bill of ladings.
Yeah.
But broadly speaking, it creates opportunities to invest in companies that are developing new technologies and solutions to address the challenges caused by non-standardized processes. So if you're first to do it, you can benefit greatly from it. You'll be first mover with wider adoption. But obviously the risk with that is that it can sometimes result in commoditization, which would be tough to underwrite to in the long term as an investor. Mm-hmm. So making sure that doesn't happen, is first in mind when we think about that. And I would say, on the other hand, if I had to take the other side of the argument, I would say that the lack of standardization is also constrained because the logistic industry is it's vast, it's fragmented. You have numerous stakeholders and processes. So the absence of standards, like we're seeing with EBL, has probably played a role in the lack of adoption. So having different EBL systems that don't communicate with each other is problematic for adoption. So I think heading towards interoperability and some standardization is going to help drive adoption and going to benefit companies like Wave and others, right?
Yeah. Again, all of these questions probably could be their own 30-minute conversation. So I know we're trying to cover a lot of ground. I don't even think we got to everything that I wanted to ask you about. But you mentioned tennis at the outset, which is what brought you to the US, which brought you to where you are today. I'm a huge tennis fan, always have been. So I have to know, so first of all, what was your playing style? Who was your favorite player growing up?
Yeah, I was more of a baseliner and counterpuncher, trying to focus on consistency. I wasn't the most powerful player, so I relied on my ability to keep the rallies going. Yep. And wait for the opportunity to be aggressive. So that was my playing style. Favorite player, historically, Roger Federer. That's an easy one. His style of play, the way he carries himself, I absolutely loved. And I think at his peak, there's a lot of debate about who's the GOAT. I think Djokovic has kind of, settled that debate about who's the best of all time. Unfortunately, for sure. Unfortunately, but I think at his peak, Roger was really the best of all time.
Yep.
And then now there's some the current landscape is quite good. You have Alcaraz. He's going to be a force to be reckoned with over the next 10, 15 years.
For sure.
And his matches this year against Djokovic were amazing. The Wimbledon final, Cincinnati was incredible.
Yep.
I wish we'd have had a rematch at the US Open, but Medvedev was just too good.
He was on fire that night. Yeah. Oh my God. He's never played better. He should have saved that for Novak. I know. Yeah. So my one gripe, I grew up in the 80s. I mean, it was amazing. 80s and 90s were amazing to watch from a tennis standpoint. And there was a lot more variety in the style of play.
Yeah.
The fitness levels and the training and the rackets and the surfaces, they're all just set up now for everyone to play like baseline power.
Yeah.
It's rare. So I sort of gravitate to players with one-handed backhands and who come to net a little more and are more shot makers rather than, tons of power. So
I think that's what people love Roger so much too. Just,
great.
A little bit more old school, very aggressive, one-handed backhand, can slice his backhand really well.
Yeah.
Just so much fun to watch.
Yeah. Well, we'll have to do maybe I'll start a show just about tennis and supply chain. And have conversations about this. So. All right. So last, I don't normally get to talk about sport or tennis with every guest because not all of them have played like at a D1 level. But I do ask this question of every guest as the last show: favorite band or musician, and you have to tell me why.
I can only give one, right?
I answer how you see fit. I don't want to like put anyone in a box. I know everyone has like tons of different tastes.
It's too hard. I'll give you two if that's okay.
Yeah.
Because I feel like I have to give my my home country a shout out as well.
Okay.
Really like this band called M83. I don't know if you've heard of them.
Oh yeah, absolutely. I love them. Yeah, they're great.
It's hard to describe the type of music, but it's like multi-instrumental synth pop.
Yep.
Electro pop rock. Very, very, very great band. Just absolutely love them. Been enjoying the music for a long time.
Yeah.
And then the second one, I'd say The Killers. I think it's one of the best alt rock bands in the world. Just really like them. I got the chance to see them in concert. Actually, at the Amp in Rogers, Arkansas, they came to play, which was very unexpected. It was incredible.
Cool. That's good. Two good bands. Really good. Actually, I went to see a stand-up comedian 2 weeks ago, and he came out to an M83 song. So very, very fresh in the mind. So, well, Gregoire, thank you so much. It's been a great conversation. I feel like we barely scratched the surface on some of this stuff, but there's always too much to talk about and not enough time. So really glad you could make some time. And what's the best way for people to reach you and find out more about NewRoad?
LinkedIn or email. You can email directly. It's Gregoire at newroadcp.com. So a LinkedIn message or an email.
Cool.
Both work.
Yeah, very responsive. Gregoire always gets right back to me. So I always appreciate that. Well, thank you. Really appreciate your thoughts, and we'll see each other soon. I'm sure. I'll be at Manifest next year. So.
Well, I just got my ticket for TPM, so I'm excited for that. Yeah, excellent. And thanks for putting TPM Tech at the same time this year. It's going to be great.
Oh, thanks, you weren't the only one. So yeah, the 9 days was too long to keep people at a conference. So yeah, it should be fun. It should be really good this year.
Thanks for having me, Eric.
Absolutely. Have a great weekend. All right, cool. Hey, I just wanted to say quickly, thanks to, and I'm going to butcher some of these names. Sorry about this. Babatunji, Emmanuel, Azim, and Mani. And there was one other person who chimed in, or Mahmoud. Thank you all so much. So many people tuning in, it looks like, from Africa, Nigeria. Where else did I see? A bunch from Nigeria and Egypt. So thank you. Really appreciate it. I only do this show based on all of your support and hope it's a valuable 45 minutes of your day. So let's wrap up. Dad joke of the week this time is a theme because my son is in 5th grade and he's studying the different types of rocks. So I had to do a rock themed dad joke this week. So what did the igneous rock say to the magma? I'll give you a second to think about that. What did the igneous rock say to the magma? I'm the same as you, but cooler. It's a good joke, right? That's like a classic dad joke. So there you go. That's my sign off for the week. If you're going to be in Barcelona next week at the Freightos event, I will see you there. Sign up. Still plenty of time to sign up for Abu Dhabi IAPH event in end of this month. Don't forget to find out more about Bloom and Vision conference at the beginning of November. Thank you to Nicole, my awesome producer. She does an amazing job, makes my life so easy. Thank you to Sarah and the Let's Talk Supply Chain team, including Rob, for also making my life easy and very fun. And I will see you all in 2 weeks for the next episode of Logtech Live, where I have another great guest lined up. So make sure you tune in. Have a great